You can be the bank. Earn passive income on your money by investing in notes secured by real estate. Daniel and I have been investing in real estate for a combined total of 60 years. We have a lot of experience. In the past, we focused on using our own funds and seller financing to build our portfolio of homes. Recently, we've been getting a lot more folks asking if they could partner with us on deals. Currently paying 8% simple interest to investors who want to invest in our current projects. That sometimes changes. The math is pretty simple. For example, if you invested $100,000, the return would be $100,000 times 0.08 or 8% equals $8,000 per year, which is $666.67 per month. You would be paid interest for every month we have your money until the end of the agreed upon term of the loan. After that, you could either reinvest your funds or, if you prefer, we could return your entire principal investment to you. The term of the loan depends on the project. We can do loans for as little as 1 year or as long as 30 years. How your investment is secure. Your funds are secured by a deed of trust recorded against one of our properties. When we close the loan, a lender's title policy will be issued so that you can know the property has a clear title. There will also be a note recorded by the title company at the county recorder's office showing a lien in the amount of the loan against the subject property. If there is currently a loan on the property, the note would be in second position. If there are no current loans on the property, the note would be in first position. Either way, we won't borrow more against a property than the current market value. We will give you a market value of the property so you can see what your loan to value percentage is on the property. For example, if you loan $90,000 on a property that's currently worth $100,000, your loan to value is 90%. The lower the loan to value, the more equity it secures you in the property and the more secure the investment becomes. But security is not just about loan to value. It's also about who the borrower is, which is us, and their experience and reliability. It's also about the quality of the investment itself. We will also list you, the lender, as additional insured on the property insurance policy. That way, if something were to happen to the property to cause a total loss, let's say it burns down, the insurance company would pay the lender from that insurance settlement. So that's about it. 1, you invest your money with us. 2, we secure it with real estate investments. 3, we make payments to you monthly, quarterly, or annually, depending on the project. 4, when the term of the loan is up, we give you back your principal investment. Let me go over a few frequently asked questions. What is a private money lender? Private money lenders loan money to investors like us who purchase and renovate properties for resale or rental. A private money lender is an individual who lends out their own capital for real estate investments. They are a private person or entity. They're not part of a bank or other financial institution. This type of lender could be anyone with the financial ability to invest. We sometimes work with small companies who want to invest their funds, but mostly we work with mom and pop investors who want to get a better return on their retirement accounts than they can get with their passive investments. Next question. Why not just use a bank to fund the deal? Private money loans are more flexible than traditional financing. Borrower qualifications, guidelines are fewer and less strict, especially when the lenders are friends or family members. One key difference is that private money lenders are more likely than others to be willing to finance the acquisition of distressed properties in need of significant repairs, which is something we do a lot of. This allows investors to purchase discounted properties and pay for renovations that increase the value of the property. The flexibility of private money lending also makes it faster. A borrower can get the money to do a deal in days rather than waiting several weeks to get funded by a conventional mortgage. And there's a lot less red tape. Next question. I have no experience investing in real estate. Is that a problem? We have lots of experience, and your investment will be secured by real estate. Even if we fail, knock on wood, your money will be secured by the property. Next question. What if there is an emergency and I need my capital back immediately? Your money will be tied up in the real estate for the term of your investment. We have short-term loans and long-term loans. We try to help you pick the one that best suits your needs. Next question. How can you afford to pay 8% simple interest on these loans? Banks make money by loaning out their customers' deposits. They typically pay between 1 and 4% to the depositor, and they charge 7 to 12% to borrowers. Banks make a profit on that spread. Here are two examples of how we use your money and why the 8% return we pay to you is still profitable to us. One is short-term deals, like a rehab. We buy a property below market value. When we find a good fixer deal, we come in with cash and purchase it. We'll then usually fix it up and invest more money in the rehab. Here's an example deal that we've done in the past. Purchase price $50,000. Rehab cost $20,000. So our total investment in the property is $70,000. After repair value, ARV it's called, is $100,000. So there's $30,000 of equity in that deal, which will make it make sense for us to pay 8% on that money. On a short-term deal, less than a year, we would fix the property in a few months and then put it on the market and sell it. We would then recoup our investment, pay off our investors, or reinvest their money in a new project if they prefer, and take a profit for ourselves. On a deal like this, the selling and carrying costs will be approximately 10% of the whole deal, so $10,000. So our profit on a flip deal like this would be about $20,000. The second type of deal we often do are long-term deals. On a long-term deal, we would fix the property and rent it to a long-term tenant. We would get monthly income from that tenant. That would allow us to continue to pay interest on the investor's long-term loan. Monthly income on the previous scenario, on a, say, $100,000 house, would be about $1,200 a month of income. Our profit, and we don't typically take a profit until we sell the property, but doing it this way allows us to pay off the lender and keep the property for appreciation and future income once it's paid off. If we were to borrow money from a conventional lender for these kinds of deals, we would pay anywhere from 6 to 9%, and it would still make sense and be profitable for us. Banks also have other loan fees that we would have to pay. We've used bank loans many times to do these kinds of deals in the past, but banks create a lot of unnecessary paperwork and bureaucracy and can be difficult to work with, and it's much more pleasant working with private lenders. Next question. Will the private money lender be paid back less or more if the project does not do well? Loan repayments are not based on the performance of the project. All private money loans are paid back based on a predetermined, guaranteed amount of time and return. If we defaulted, you'll have the property as security to recoup the investment. To date, we have never defaulted on a private money loan. We don't plan to start now. Next question. Why not just use a traditional bank? We also use traditional financing in certain situations, but there are a few reasons why traditional financing might not be the best option in every situation. I've mentioned some of these before, but let me just go over the basics. Number one is speed. Traditional financing can easily require up to 60 days to close a loan due to coordination of inspections, appraisals, and title work. 2. The high cost of traditional funding, which includes closing costs, points, doc fees. The list seems to be endless. 3. Traditional financing requirements are constantly changing, and frankly, if you've ever tried to get a mortgage, you'll know personally that bank underwriters are a pain in the neck to work with. 4. When dealing with a bank, we have less control over the deal if anything goes wrong. Sometimes there's a simple fix for a problem that a bank just can't get their head around. It's always easier to solve problems with people rather than with institutions. 5. We buy a lot of properties. Most traditional finance companies have a limit on the number of mortgages they can issue to one entity because of Fannie Mae and Freddie Mac rules. 6. Almost every lender sells their mortgages to other companies when they're in a liquidity crunch. That means the relationships we build with lenders don't matter to them. Once they sell our loan, we have to make payments to a different company who we may not even recognize. If we're going to create a ROI, a return on investment for anyone, we prefer it to be someone we trust and who trusts us. I don't think anyone likes to be treated like a number, and we're no different. Next question. Why should I trust my hard-earned money to your company? We have a pretty amazing track record. We've been in this business for a long time, and we know what we're doing. We also provide a lot of transparency in our deals. You'll have the security of a note against one of our properties. You can ask for and receive an accounting of the property you're invested in at any time. We have a bookkeeper who can print out a P&L from QuickBooks within just a few days, so you can see where the project stands, what the costs are, what the expenses are, what the income is. We also know the value of a good reputation. A good reputation can be lost in an instant, and we know that and do everything we can to protect it. Next question. I have no experience lending money. The entire transaction is closed at a professional title company. They'll draw up the paperwork and record the trust deed at the county recorder. This is all overseen by a real estate attorney. If I were investing my money like this, the thing I would want to know is, does the borrower have equity in the property I'm loaning against? Does the borrower have experience and successful outcomes with their investments? And do I like these guys? What is my gut feeling? No matter how good the deal sounds, don't invest with people you don't trust or like. Next question. I don't know what title companies, lawyers, or documents to use. We will take care of all these things. All you have to do is sign the documents and wire the investment funds to the title company. Next question. I have failed at finding credible people to lend to in the past. Real estate investing is not for everyone. The reason there are not a lot of credible investors out there is because it's a business that tends to eat its young. It can be brutal, especially for beginners. But once you've been doing it for 20 or 30 years, there aren't very many things that you haven't seen. And since we've already made our major mistakes, and I can tell you, we've made mistakes and they weren't fun. But God willing, because of our experience, we'll see problems before they arise. And because of our experience, we won't get rattled. We won't run away, and we won't give up. One thing about business, if you're an entrepreneur, you get paid to solve problems. If there aren't any problems, there's no money to make. So we welcome those problems because they mean opportunity. 6 reasons to invest your money with us. 1. Every investment is secured by real estate. 2. It's a completely passive investment that earns income 24 hours a day, 7 days a week, without fail. You don't have to do a thing. 3. Every investment goes through a reputable title company with a title policy in place and security in the form of real property. 4. Every private money investor is added to the property insurance as an additional insured, just like a traditional mortgage company. 5. All the paperwork is completed for the lender and reviewed by the title company lawyers. 6. We have flexible repayment schedules. For example, simple interest payments can be paid monthly, quarterly, biannually, annually, or at the end of the loan term. We're pretty flexible depending on the particular deal we're doing. All right, that's all I've got for now. If you have questions, please don't hesitate to ask. You might want to read about our background and our experience on our website or the PDF. You should also read our disclaimers that are required by the FTC. No investment is guaranteed ever, and ours are no different, but we do promise that we're going to do our very best. If you're serious about working with us, please contact us and let's get going. I look forward to meeting you, working with you, and helping you reach your investment goals. Thanks.